of the one thing that can actually protect you because it's out of the system. They can't control it. That's why they don't want you to buy it at the same time that they are buying it as fast as they can.
Welcome to a community of knowledge and empowerment with Lynette Zang. In today's video, let's unite because there's strength in numbers. Lynette sheds light on a powerful truth. There are more of us than there are of them. Central banks are on a gold-buying spree like never before, a trend not witnessed in recorded history. Yet, in this era of awakening, the public, including retail giants like Costco, is becoming increasingly conscious of the unparalleled protection offered by gold. It's the one asset out of the system, beyond their control, and they don't want you to grasp its true value. Join us as Lynette unravels the dynamics of this paradox and explores the vital role gold plays in safeguarding your wealth.
And let's go back in history so I can show you where we were and you can see where we are right now, because these patterns repeat. So what you're looking at is union membership and income inequality over time. And first I want to take you back to 1933. And even during the Depression, what do we see? We see that income inequality continued to go up. So those 1%ers continued to even make more money during the Depression. Not everybody was depressed. The public was, but the 1%ers, a lot of them lost their wealth during the 29 crash, but a lot of them did not. You know the pictures, well, that are behind me in the other office, and I show you Seabiscuit. That was a $100,000 pot, and that was a lot of money back then. Look at also where the unions are, way at the bottom. So once we hit a peak, what did we see happen? We saw the 1%ers income decline while unionization spiked big. And then, of course, we went to 1971 and 1980s, and all of that shifted again, where we see that income inequality start to get wider and wider and wider, and truthfully near the levels, both of them are near the levels that they were back in 33. So do you think that this could be a repetition of history? Because I do. I've been talking quite a bit about the rise of the unions. Now this graph refers to 2020, and we know what's been happening in 2022 and 2023. But today there were 65 fewer union members than there were in 1945. Isn't that interesting? With the 1% share of income near the all-time highs. So this is the backdrop and the setup, because we are seeing the rise in the worker. The tides may be shifting once again as union membership increased by 7.4% between 20 and 21, and more young people are favoring unions. Well, yeah, when things are not equal and they get to an extreme level, guess what? People notice. So I believe that this is where we are right now, and I think the revolution, frankly, has already begun. Maybe we can't see it, but sky-high CEO pay is in focus as workers everywhere are demanding higher wages. Now, of course, we are on the precipice of a financial crisis, but let's just see where we are because most people don't see that. Growth in CEO compensation during the pandemic, 2019 to 2021, that became very obvious. Now, we just had some success at the UAW, and remember, success begets success. So at the three key auto factories, CEO to worker pay ratio, Mary Barra, 362 to 1. So she made over $29 million. The medium worker made $80,000. In Ford, it was 281 to 1. Jim Farley, $21 million. Median worker, $74.7. 74,700. And at Stellantis, 365 to 1. So Carlos Tavares, 24.8 million, average worker, 67,789. Well, that ticks people off, doesn't it? Recent estimates suggest that CEOs at one of the top 350 U.S. firms earn $27.8 million per year on average. That is 399 times what the typical worker earns and 1,460% more than executives earned in 1978. You have to ask yourself, is that okay with you? Or can we be part of this revolution that is unfolding? Because we have that opportunity now. Can you see this happening? This is our chance. This is it. Let's all come together in community because there are more of us than there are of them. And while we are seeing central banks buying gold at a clip never seen before, we're also watching the public become more aware of gold, of the one thing that can actually protect you because it's out of the system. They can't control it. That's why they don't want you to buy it at the same time that they are buying it as fast as they can, faster than ever in their recorded history. Bar and coin demand. So this is public demand. So far in 2023, this is the third quarter as of September 30th, is on par with the last 2 years of healthy investment. You think? Looks like the revolution has begun. Be part of it. Own gold, own silver, hold it, own it, because everything else is a contract. Everything else runs counterparty risk, and they will use that to control you. So that, hey, never let a good crisis go to waste. How about this time the wealth transfers the public's way? How about that? How about if we take back our power so we retain our choices? Because we certainly can see that those that are in power are not doing this for you and me. They're doing it for themselves to remain in power. And their job is to lie to you because they gotta keep you in the system. But we have this opportunity, the rise of the worker. How about the rise of the public? Let's come together. Let's make this happen. Because together, we are so much stronger. And we are. We are all in this together. This, my friends, is your financial shield, your wealth shield. Physical gold, physical silver in your possession. Get it done. Time is running out and time is of the essence. And until next we meet, please be safe out there. Bye-bye.
In times of change, being informed is your greatest asset. Explore the possibilities, delve into the uncharted, and continue to empower yourself. Thank you for joining us in this community of insight. Until our next exploration, stay curious, stay informed, and may your journey be guided by understanding and foresight. Please like, share, and subscribe to our channel if you have gained any knowledge. Thank you again.